95% of traders blow up their accounts, not because they lack intelligence, not because they don't understand charts. They explode because when the pressure hits, their brain hijacks their strategy and forces them to execute like an amateur on tilt. Here's what nobody tells you. The difference between the trader who makes it and the trader who flames out in 18 months has nothing to do with their technical analysis or amount of capital. It has everything to do with whether they can sit still when every cell in their body is screaming at them to do something. You're not losing trades, you're losing emotional control, and that loss costs you everything. The brutal truth? You already know enough to be profitable. You've read the books, you understand support and resistance, ICT strategy, CRT strategy, indicator strategies, and all the strategies you can think about. You can spot divergences. But when you take that third consecutive loss and your stomach drops, when you see price rip without you, and FOMO floods your nervous system, when you move your stop loss for the 5th time this week because it just needs a bit more room, that's not a knowledge problem. That's an execution problem. That's your emotions writing checks your discipline can't cash. The 95% think the solution is more information, another indicator, a better strategy. The 5% understand the truth. Trading isn't hard because the patterns are complex. Trading is hard because sitting with uncertainty while risking real money breaks your brain in ways that contradict everything evolution taught you about survival. I'm going to show you the exact shifts, not theories, not concepts, but actual executable shifts that transform you from someone fighting their emotions to someone who trades like emotion is irrelevant. Because here's what the 5% figured out. You don't beat emotions, you don't ignore them. You build a system so simple and so absolute that emotions become background noise while you execute. Let me tell you about 2 traders. Same strategy, same market, opposite outcomes. First, there's Marcus, the analyzer. Marcus has 7 monitors. He subscribes to 4 premium Discord groups. He's got 73 indicators loaded and 2 bots running in the background of his MacBook. After taking a loss, Marcus immediately opens 12 new charts looking for the next setup. His brain is on fire. He's convinced that if he just finds the right confluence, he'll recover. He moves from Euro USD to gold to crypto in 40 minutes. He doubles his position size because this one is obvious. He removes his stop loss because it's manipulated to hunt stops anyway. 3 hours later, Marcus has turned a 2% loss into a 13% dent in his account. He's exhausted, defeated, and posting in trading forums about how the market is rigged. Now Jane, the executor. Jane takes the same loss Marcus did, same entry, same stop. The difference, Jane closes her laptop. She literally walks away. She has a rule: 1 loss, 15-minute minimum break. 2 losses, done for the session. She doesn't check Discord. She doesn't open new charts. She doesn't hunt for revenge. Her afternoon looks like this: loss registered, laptop closed, 15-minute walk, review trade journal, write 3 sentences about what she saw. Done. End of process. No analysis paralysis, no emotional spiral, no revenge trading. When Jane returns to her screens the next session, she executes her next setup with the exact same position size, the exact same risk, the exact same rules. Not because she's stronger than Marcus, but because she never gave her emotions the microphone. Here's what separates them. Marcus believes that more effort, more analysis, and more screen time equals better results. Jane understands that trading is a game of emotional regulation first, market analysis second. Marcus is reacting. Jane is executing. Marcus added complexity when he was emotional. Jane enforced simplicity when she was vulnerable. The executor wins not through superior analysis, but through superior emotional hygiene. And that's available to anyone willing to stop fighting the war and start playing the game they've already won. Let's discuss about the psychological traps breakdown. Trap 1 is that you're hardwired for trading failure. Your brain evolved to keep you alive on the savannah, not profitable in the S&P 500. Loss aversion, the principle that losing $100 hurts twice as much as gaining $100 feels good, isn't a bug in your psychology. It's a feature designed for survival. But in trading, it's a death sentence. When you're down, your brain treats that loss like a threat to survival, triggering fight or flight responses that obliterate rational decision-making. Evolution optimized you for avoiding hungry predators, not managing probabilistic outcomes with incomplete information. The trader who understands this stops blaming themselves for being weak and starts designing systems that account for their biology. Trap number 2. The uncertainty paradox shatters your confidence. Trading is the only business where being right 60% of the time makes you elite. Think about that. In most areas of life, 60% is failure. Trading rewards you for being wrong constantly, if you manage risk correctly. But your ego can't handle it. Every loss feels like proof you're an imposter. Every win feels like validation you're a genius. This emotional roller coaster destroys traders faster than bad strategy ever could. You're not supposed to know what happens next. Uncertainty isn't a problem to solve. It's the game itself. But most traders spend their entire careers fighting this reality instead of accepting it. Trap number 3. Revenge trading is your brain on fire. After a loss, your brain doesn't want profit. It wants justice. You feel cheated, wronged. The market took something from you, and now you're going to take it back. This isn't trading. This is your limbic system hijacking your prefrontal cortex. Research shows that the pain from losing activates the same neural pathways as physical pain. Your brain perceives financial loss as an attack. Revenge trading isn't a strategy failure. It's a survival response. And until you recognize that the urge to make it back immediately is neurological, not logical, you'll keep feeding the slot machine. Trap number 4. Complexity addiction makes you feel productive. When trading isn't working, your instinct is to add more indicators, more time frames, more analysis, more Discord channels. It feels productive. It feels like you're doing something. But complexity is a coping mechanism for emotional discomfort, not a path to profit. The amateur trader believes that if they just had one more data point, one more confirmation, one more piece of information, they'd finally crack the code. The professional knows that adding complexity when you're losing is like drinking salt water when you're thirsty. It feels like you're doing something, but you're actually making the problem worse. You're measuring the wrong thing. You check your profit and loss 40 times per session. You know your win rate to the decimal. You track every dollar gained and lost, but you have no idea how many times you followed your rules. Outcome obsession is the silent killer. You can do everything right and lose. You can do everything wrong and win. The market doesn't care about your process in the short term, but your account absolutely cares about your process in the long term. When you measure outcomes instead of execution, you're teaching your brain that results matter more than behavior. That's how disciplined traders become gamblers. Your wins are more dangerous than your losses. After 3 winning trades, you feel invincible. Your position size creeps up. Your risk tolerance expands. You start taking B setups because you're hot. This is when accounts die. Not after losses, after wins. Winning triggers dopamine release, creating a biochemical high that distorts risk perception. You stop following your rules because your brain is convinced you've figured it out. Professional traders are more paranoid after wins than losses because they understand that euphoria is just as dangerous as fear. Both states compromise execution. You're confusing movement with progress. The market is open 23 hours a day in FOREX, 5 days a week in stocks, and your brain interprets all that movement as opportunity. Sitting still feels like missing out. Doing nothing feels like laziness, so you trade. Not because you see your setup, but because watching without participating is psychologically intolerable. This is how overtrading destroys accounts, not through bad entries, but through the emotional need to be active when the only profitable move is patience. The 95% believe that more trades equals more opportunity. The 5% understand that the best trade is often no trade. Trap number 8 is when the sunk cost fallacy keeps you in losers. You entered a trade, it went against you immediately. Your stop loss is right there, but you don't take it. Why? Because taking the loss means admitting you were wrong. Your brain reframes the situation. It just needs more time. I'll wait for the retest. I'll exit at break even. This is the sunk cost fallacy in action. You're holding a losing position not because the analysis still supports it, but because cutting it admits the initial capital is gone. The professional trader cuts without emotion the moment the thesis is invalidated. The amateur holds, hoping the market will validate their ego. Trap number 9 is when you're seeking certainty in a probabilistic game. You wait for confirmation, for one more signal, for conviction. You're trying to turn trading into a binary equation. If X and Y and Z, then profit. But trading isn't physics, it's probability distribution. Every edge exists within uncertainty. The need for certainty before acting is what keeps you from pulling the trigger on good setups and what keeps you frozen when you should exit bad ones. The 5% are comfortable acting with incomplete information because they understand that waiting for certainty means the opportunity is already gone. Finally, trap number 10 is about your identity being attached to your trades. When you lose, you think, I'm a bad trader. When you win, I'm a good trader. You've made trading performance synonymous with self-worth. This is psychological suicide. You are not your trades. You were the person executing a system. When your identity is tied to outcomes, every loss becomes an existential crisis. Every win becomes proof of your value. This emotional volatility makes consistent execution impossible. The professional trader has separated who they are from what the market does. The amateur lives and dies by every tick. Now, let's shift to the solution framework. Shift number 1 is design your system for your worst day, not your best. Stop building trading plans when you're motivated and rational. Build them when you're tilted, exhausted, and questioning everything. Your system must work when you're at your weakest, not your strongest. This means rules so simple that a 10-year-old could execute them. Maximum position size locked, maximum losses per day absolute. Entry criteria binary, yes or no, not it depends. If your trading plan requires you to be disciplined, you've already lost. Discipline fails, systems don't. Shift number 2, process your outcome. Always. Starting today, you track exactly 2 things. Did I follow my plan? Did I execute my process? That's it. You don't track dollars. You don't track win rate. You track behavior. Every session ends with one question. Did I execute correctly regardless of outcome? Grade yourself pass-fail on execution, not profit. This shift breaks outcome addiction because you're rewarding yourself for the only thing you can control, your actions. The market owes you nothing, but you owe yourself adherence to your system. Shift number 3, implement emotional circuit breakers. You need predetermined rules that remove you from the game before emotion removes your account. Here's the framework. 2 consecutive losses, session done. Violate your max position size once, trading suspended for 24 hours. Feel the urge to revenge trade? Close your platform immediately. These aren't suggestions, they're automatic systems. You decide the limits when you're rational, so you don't have to make decisions when you're emotional. Think of these as the emergency brake on a runaway train. Your emotions are the train. The brake is the circuit breaker. Shift number 4, make patience your primary strategy. The 95% think patience is what you do while waiting for your trade to work. The 5% know that patience is the strategy. Most days, your job isn't to trade, it's to not trade, to sit, to wait, to watch. The market pays you for waiting for your edge, not for participating. Reframe your identity. You're not a trader who sometimes waits, you're a waiter who sometimes trades. Every day you avoid a bad trade is a winning day. The absence of action is your most profitable position. Shift number 5, ritualize your post-loss recovery. You need a non-negotiable protocol for what happens after losses, not a suggestion, a ritual. Here's mine. Loss hits, close position. Stand up, walk away for 15 minutes minimum. Return, journal 3 sentences about what you observed. Close platform for 60 minutes. Done. No revenge analysis, no looking for the next one, no trying to make it back. You've created space between stimulus, loss, and response, action. That space is where professionals live and amateurs die. Shift number 6. Simplify until it's boring. If your trading approach requires more than 3 criteria to enter a trade, it's too complex. If you're looking at more than 3 indicators, it's too complex. If you need to check 4 different time frames, it's too complex. Complexity is the enemy of execution under pressure. Simple systems are executable when your brain is compromised. Complex systems fall apart the moment emotion enters. Your goal isn't to build the best system. It's to build a system so simple you can execute when you're scared, greedy, or tilted. Boring systems make money. Exciting systems make stories. Shift number 7. Fixed risk. Always. 1% per trade. Every trade. No exceptions. Not 1% usually, not 2% when I'm confident, 1%, period. This single rule does more for emotional control than any meditation app ever will. Why? Because when every trade risks the same amount, every outcome matters the same amount. No single trade can destroy you. No single loss can spiral into catastrophe. Fixed risk removes the emotional stakes that trigger revenge trading, position size escalation, and all the other psychological disasters that blow up accounts. Shift number 8. Weaponize strategic ignorance. Stop checking your profit and loss during the trading session. Stop looking at your account balance. Stop calculating what you're up or down. This information actively harms your execution. When you know you're down, you feel pressure to make it back. When you know you're up, you feel pressure to protect it. Both states compromise decision-making. Ignorance of results during execution is a feature, not a bug. You check your performance once per week, not once per minute. The trader who doesn't know their P&L trades better than the trader obsessed with it. Shift number 9. Build a pre-trade checklist that demands calm. Before any trade, you run through a mandatory checklist, not technical criteria, emotional criteria. Question 1. Am I entering this trade because I see my setup or because I'm bored? Question 2. Am I calm enough to accept this loss before I take it? Question 3. Would I take this exact trade if I were up 50% this month? If you can't answer all 3, you don't trade. This checkpoint catches 90% of emotional trades before they happen. The setup doesn't matter if you're not in the right state to execute it. Shift number 10. Reframe your identity. You are a rule executor. Stop calling yourself a trader. You're not a trader. You're a rule executor who happens to operate in financial markets. Traders make decisions. Executors follow systems. Traders react to markets. Executors react to rules. This identity shift is everything. When you're a rule executor, taking a loss isn't failure, it's following your system. Sitting in cash isn't missed opportunity, it's following your system. The market becomes irrelevant. The only thing that matters is whether you executed your rules. This identity makes you psychologically bulletproof because you've stopped playing the market's game and started playing yours. Identity shift and final call. Here's what this all comes down to. You have to stop being a profit chaser and become a rule executor. The profit chaser wakes up thinking about what they'll make today. The rule executor wakes up thinking about what process they'll execute today. The profit chaser checks their P&L 40 times. The rule executor checks their process adherence once. The profit chaser thinks trading is about finding opportunities. The rule executor knows trading is about waiting for their specific edge and executing it without emotion. The profit chaser experiences every tick as validation or rejection. The rule executor experiences every tick as irrelevant noise around a probabilistic system. This shift from outcome obsession to process obsession is the difference between the 95% and the 5%. And here's the part that nobody tells you. The 5% aren't trading, they're executing, day after day, setup after setup. No drama, no excitement, no stories about how they crushed it or got destroyed. Just saw setup, took trade, managed risk, repeated. It's boring, devastatingly boring. That's how you know you're doing it right. The 95% are looking for excitement, for big wins, for the rush of being right. They treat trading like a slot machine with charts. The 5% have recognized that trading is business execution under conditions of uncertainty. It's not supposed to be exciting. It's supposed to be systematic. So here's your choice. You can keep fighting the war, reacting to every price movement, trying to predict the unpredictable, searching for the perfect system that doesn't require discipline. You can stay in that 95% that churns through accounts, blames the market, and never understands that they're the variable causing their own destruction. Or you can start playing the game you've already won. The game where you've pre-decided every variable before emotion enters, where your trading plan is simpler than your grocery list, where you measure execution, not outcomes, where losses are accepted before the trade is taken, where sitting in cash is a position, where patience is the strategy, where simplicity is the edge. That game, you win it by refusing to play the market's psychological warfare and instead executing a system so boring, so simple, so mechanical that emotion becomes irrelevant. The edge isn't in your analysis. The edge isn't in your indicators. The edge isn't in your market knowledge. The edge is in your ability to execute the same simple process repeatedly while the market does everything in its power to make you deviate. You're not losing trades, you're losing emotional control. Fix that, and everything else fixes itself. The brutal truth nobody wants to hear: the market doesn't beat you, you beat yourself. And the moment you stop fighting yourself, the game gets a lot easier.